The euro and the pound sterling continue losing value. Notably, the British pound is falling faster than the single currency. Let us find out the key reasons for such a movement. Rumors that the European Central Bank may raise the benchmark rate 4 times this year are supporting the euro. However, they look more like fake news, which does not have any grounds. Yesterday, the US mass media cited some traders who are allegedly forcing the ECB to take such a measure. Notably, the central bank has not made any official announcements. In addition, this fact contradicts the recent speech of Christine Lagarde. At the press conference, the ECB president said that the regulator had no intention to raise the key interest rate. Since in the mass media there is no fresh news on this issue, we can say that it's a simple market manipulation. Nevertheless, this was enough to slightly revive the trading activity. In any case, the European currencies are under significant pressure. The fact is that in the near future, payments for Russian gas will be accepted only in Russian rubles. European countries suppose that these changes are not reasonable. The local authorities are calling on the companies not to pay for gas in rubles. However, a complete cessation of Russian gas supplies is still the key problem. Russia has already officially said that it will stop supplies if Europe refuses payments in rubles. And thus until April 1st, when Russia is going to start selling gas in its national currency, the euro and the pound sterling will remain under considerable pressure. Let us switch our attention to the trading charts. The euro-dollar pair failed to break the lower limit of the sideways channel of 1.0960 and 1.1050. As a result, it returned to its previous levels. And the fact reflects an uncertainty among traders and an accumulation process. Under the current conditions, traders are likely to remain focused on the range, as the pair will hardly leave it in the near future. Thus, it's possible to apply the breakout strategy. In addition, the price stagnation may cause a new wave of speculation. Meanwhile, the pound-dollar pair is hovering within the range of 1.3175 and 1.3220, thus positively affecting the volume of short positions. The pound sterling opened the new trading week with a decline of about 100 pips. As a result, the quote slid below 1.31. A sharp change in the price allowed the pair to touch the oversold level in the short-term period. On the chart, this is proved by the settlement near the level of 1.3100, and if the price fixes below 1.3050, it's likely to slide deeper towards the support level of 1.30. And you have watched Financial Market News on InstaForex TV channel with me, Kate Stichina. We wish you profitable trading with InstaForex and see you soon.